The bulls are back in control. Dip buyers arrived. The market is floating higher again. Similar concentration. We talked last Friday about looking for softness, looking for some weakness, and a pullback coming into the week. And we got it. 2 days. That's all we got. Dip buyers showed up pretty aggressively at the middle of the week. We had NVDA earnings and these two forces that we continue to talk about here, the macro pressures with this AI super cycle. They came head to head this week and the bulls won. I want to talk about what has changed, what's still the same, and where we are seeing opportunity. So stick around here. Let's get into it. This is the slide that I presented last week, and we don't have to rehash this, but this is a glorified sort of view here of these two forces, the macro versus AI. We're just going to call it simply that. And let's walk through some of those macro pressures we talked about last Friday. We had 10-year treasuries accelerating up, putting a good amount of pressure on markets last week. And this is what the charts looked like coming into this week. Here's how they followed up. Sorry, the chart's a little bit smaller here, but you see just a big old kind of goose egg, a rejection at highs. We tried to push up immediately at the beginning of the week. We reversed, failed to hold those highs, and we got a nice inverted hammer exactly where we needed it to be to take some of that pressure off. Let's look at oil. This is the weekly chart of WTI front contract, and you can see crude oil was down, call it 5% this week, back into this range, consolidating, still structurally in a very healthy uptrend, mind you, but it didn't accelerate higher. We got the pressure taken off. How about market breadth? These were small caps this week, and you can see the Russell had about a 6% pullback here right into this 270 zone. Prior highs in January, support in April, and the market springboard off of it and launched higher, almost to new highs to close out the week. So market breadth and a little bit of broadening, it held up. It worked as well. Pressure came off. This is our own internal gauge here we're using for QuantRocket subscribers that measures market breadth. This is Thursday's data. We're mixed. Mixed is actually an improvement. We were flat outright bearish on market breadth coming into this week. So we got a little bit of a notch up. Things improved. So all is that to say, we did get those pressures that could lead to a bigger pullback sort of taken off the market. Now, you also had NVIDIA report earnings on Wednesday, and while the stock didn't quite do a whole lot, in fact, it was lower this week, it did sort of reaffirm a lot of the AI infrastructure build-out stocks. They were the biggest beneficiaries. So it wasn't the NVIDIA specifically, it was, almost other semiconductors. It was the data centers. It was the hardware providers. It was everything else, memory. It all sort of worked following the earnings or leading into NVIDIA earnings. Semiconductors, unlike NVIDIA, are back towards highs. There was a sneaky 4-day 8-9% correction here, pullback in semiconductors. That was about it. Dip buyers came in quick. 9% from highs. That was the biggest pullback we've seen since the V-shape started in April. So that was the lay of the land. That's how things stacked up this week. The macro pressures alleviated and the AI sort of won that head-to-head battle. Now, here's something sneaky though. We have been talking about rotation, looking to see if this market can broaden out, and it did. Just not in the areas I think most people were expecting or perhaps looking for. Healthcare. Healthcare saw some rotation. You could bleed this through to biotech if you're on the riskier side, but healthcare was up over 3% this week. So there was rotation happening here. Real estate, we don't really talk about it too much. I don't track the sector too closely, but this was up over 3% this week, pushing back up towards highs. This is a notable rotation spot. And utilities. Utilities I know are usually pretty boring, but there are some high-flying utilities in here, especially with the data center build-outs. And they were up 3.4% this week, putting all collectively here, these three, marking some rotation, broadening things out, just again, not in the sectors like crypto or, I mean, software is already kind of broadening out, but in these other areas where speculation is more sort of looked upon. So that is notable. We're going to talk more about that as we get into some charts in the second half of this video. Before we run into the numbers here, I do want to shout out our sponsor, Investors Business Daily. They help make this show possible. We have discounts for you in the description of the show. 2 links, Market Surge, IBD Digital. Check them out once you get done watching this video. Here are the numbers. So Russell 2000, this was the all-star this week, almost 3% to the upside, followed by the Dow Jones up over 2%. Everything else kind of fell in line here. Oil was the biggest hit, down 5%. S&P 500, again, here was your dip. You had to be quick. It was short. It was shallow. Tuesday was the low, and then we sort of V-shaped from there. Volatility is basically the exact inverse. We peaked in Tuesday, and then we closed down around 16.7, which is pretty much the month or so recent lows. Dollar index was firm, so this worked this week. A little bit of a different pattern here, but basically still staying firm from the April-May lows. 10-year Treasury did cool off. So this was, again, a little bit of some zig and zag, some correlations breaking a bit, but we did see 10-year Treasury yields cool off, still dangerous kind of elevated territory, but the pressure was alleviated. Sector performance on the week, again, utilities, healthcare, real estate, those were your standouts, all up over 3%. Materials, communication services, energy, those were your underperformers this week. If we take a look at our indicator here that measures trend strength across our different sectors, we still have tech, we still have healthcare, we still have energy, which is at the bullish sort of pristine state. And then we have a lot of things kind of stuck in the middle here. You know, consumer staples is still pretty glass half full, but these other ones, yeah, you know, they're not doing so hot. Financials, they're trying to recover after this week's performance, but they still need to prove themselves. Industrials, recovering after this week's performance, need to improve themselves. And same thing with discretionary. Materials, the only thing right now that's outright bearish. Now, breadth from a longer term perspective on this 52-week high and low list, this is still just such a tough spot. It's kind of depressing every time looking at here to see, okay, is this rally broadening out? Are we really getting a good surge here underneath the hood for 52-week highs? And we're still not seeing it. I don't have Friday's data. This is Thursday's data, but you're almost got an even race here between highs and lows right now. So it's not exactly what you want to see. You do see, percentage of stocks above a 20 SMA. They are starting to move up here, which is, you know, again, good from that breadth on the shorter time frame length. And put to call ratio, still pretty cheap to hedge right now, especially after this week and the VIX slide. Bitcoin is still kind of, you know, crushing my heart here. Not really doing a whole lot in terms of getting itself off the floor. It is very difficult, right, as the market is continuing to tell us, to get investor appetite out here for Bitcoin when the easy layup trade is still working, right? There is still a very clear concentrated leadership role in AI and the build out. And so why do you need to take the extra risk with Bitcoin? I think that's just what a lot of folks are frankly struggling with here. And until we get more clarity, no pun intended, once that legislation can get over the hump and hopefully through and passed before the August recess, then, you know, that could be the next catalyst. TBD, right? Upcoming econ next week, we got PCE, we got durable goods and some consumer confidence. So let's get into some charts here and take a look a little bit closer at what else is going on. All right, we are back. We've got some charts in front of us here. Let's kick it off with the S&P 500. So here's the action. We had, again, a 3-day slide into Tuesday, and that's when dip buyers showed up. It was approximately a 2.5% pullback in the SPY. That is the largest pullback we've seen since the April V-shape, and that's all it sort of took. Now, we rallied through Friday. We did pull off the highs here. It seems like the market might be putting in some type of, you know, trading range now between, call it 7,300 and maybe these highs here. So let's keep an eye on that. For now, digestion, a range, that's healthy, right? Some rotation, that would be healthy. Broadening out, even healthier. But frankly, if we can consolidate here and just catch our breath, even if we kind of chop it out, I think, that's much better than any type of parabolic sort of, just blow off sort of price movements, which is what we saw basically 2 weeks ago when we just kept screaming up, up, and up. For the Nasdaq 100, it's basically the same thing. Pullback was a little bit steeper, almost 4%, biggest pullback since April. We followed a very similar pattern here. Maybe we're carving out sort of a new range here between, call it 690 and 720 in the Qs. I would welcome more chop. I would love to see things cool off next week and just kind of, move it sideways here for a little bit. And if we look at the Russell 2000, again, we showed this chart earlier, but this came down 6% from highs, retested a pretty critical area here on an intermediate basis, and it found support, it pushed higher, and life looks pretty good. Maybe small caps do take the lead here on this next leg up. Mega cap tech cools off. We see some more broadening out. I don't know that I still want to see it in healthcare and real estate per se, but generally speaking, I think more stocks working is a better thing. Now, if we move to some other areas here, we talked about oil, but just because it's important, if we look at the USO ETF, you can see again, this didn't push to new highs. So we are still kind of range bound. We're choppy. Obviously, there's still just so much up in the air on these negotiations and how things are going in the Middle East. I think we're still here higher for longer. We are depleting our reserves, and there is just going to naturally be, I think, a bid to even replenish our reserves in oil. So it feels like oil is just higher for longer. I still like energy as a hedge to a equity risk book. I know XLE is equity, but obviously tied right directly to the input of oil. And I think this still serves itself well as some kind of barbell between, hey, take on your risk with 60-70% of your cash, and then you have this sitting in some inflation kind of protection form of XLE. You could look at some other things. So I've talked about that in the past. I won't beat it up. XLE, was flat on a week. Oil was down 5%. I don't know. I'd say that's pretty much a win. It still seems broadly consolidating, but it feels like we're going to move back up here into the highs. I do have a position here in XLE, so I am long the sector. Now, if we move on to crypto, I'll touch on that quickly. Terrible way to finish the week. So, we had some life here, kind of just chopping around, holding in there. It was a gap down to start the week. That wasn't a surprise. We talked about crypto weakness coming into this week, but then it started to kind of move itself sideways here. It still is just like, really kind of making both sides angry, I feel like, and just not giving too much room. And so a move is coming, that's for sure. But so far I've been pretty much wrong in this trade. We'll see how it shakes out. So crypto, no rotation there, no love there for crypto. We did talk about the XLU getting a nice bounce this week and seeing plenty of rotation. Same thing with healthcare, plenty of rotation. Real estate, plenty of rotation. And if we take a look at semis here, just broadly, we talked last week about paying attention to volume. This was the heaviest traded volume week here for SMH last week, and it came on a down week. This week, we did have an 8% pullback in semis. We filled this gap over here. Dip buyers came in. So again, I'd say that this to me is pretty healthy. I would love to see a range develop here for a 10% sideways high to low range for a few more weeks. Much more constructive than just going parabolic, because, well, if you go parabolic for too long, then you are just inviting the crash back down. So SMH back up towards highs and volume cooling off a little bit. I think that's good. We'll see how this follows up next week. Now, if we take a look at some of the stocks, I think we'll flip over to our list here. And actually, I want to talk about the market environment for some of the work and trading systems we have here. So here's our main dashboard. Friday's numbers updated. S&P was up slightly. Galahad was down almost 1%. Quant Rockets was up almost 2%. And you can see some of the overall stats here for the week. I'll let you hit pause and read through those yourself. I do want to draw your attention to our market environment dashboard. Now, I did have some emails come in saying, hey, Evan, can I see this dashboard update. Right now, no, well, right now, yes, if you're a Rockets or a Galahad subscriber, but I do plan to try and carve this out on the side somehow. So TBD on that. We downgraded our market environment, and it's not me downgrading it. It's a fully rules-based market environment sort of algorithm or indicator, if you will, I suppose. Here's the way things look, right? We enjoyed about a 27-day uptrend, green, healthy, unapologetically long this market. And now, or really Monday, coming into this week, we did, or is this Tuesday? We did downgrade back into the mixed kind of yellow state here for our outlook. That's not a sell everything, right? I posted a video intra-week on the channel, which you can go watch on the YouTube channel on Tuesday or Wednesday ahead of NVIDIA's earnings. So we're not out here selling everything. We're not getting bearish on the market or any of that stuff. We're just simply saying, okay, things have sufficiently run their course. We've got some signals that are saying there's some cross currents here, and we just want to take the foot off the gas a little bit. If you're 100% invested, maybe you take it down to 80%. Raise a little cash, right? Just prepare for potentially have some dip buying opportunities, or to get to more cash if things deteriorate. That's the way we're looking at it. Given the way the market closed, I wouldn't be surprised if we just flip right back into bullish green territory, mid next week or early next week. Very plausible. It's very reasonable. This is why we don't sell everything. It's not a out of the market type of thing for us. It's more aggression, cash on hand, position sizing. That's the way we structure it on a momentum swing trading framework. All right. These are the rules. These are the guardrails that keep us surviving, right? I'm not a perma bull. I've been a perma bull for the last 4 weeks because of the data here. If this flips red, then I'll be a perma bear, I guess you could call me, right? That's effectively my allegiance is to things like this. What is the data actually showing me? So that's the way we're looking at it. We did get a mechanical downgrade, though. It is notable. So we're 4 days mixed. And for market breadth, we are mixed as well. So this is Thursday's data. A little bit later tonight, this will update. We'll see what it looks like. It's technically an upgrade if you factor it in from like Monday or Friday of last week, but it's still not great. I mean, it's not outright bullish, right? So that's our market score. That's how we're looking at things. You can see we still have a lot of holdings in some of the top industries here. And you can see some of these industries are starting to change shape a little bit. And you are seeing those REITs start to jump back up towards the top of the list here. So that's notable. Back to positions. I'm going to share just things that I've been sharing. SOXL, lots of folks seem to be interested in this one. Mostly of just like where we're going to get out of it. That's the current exit zone right now. Specifically, don't use stop loss. It's effectively a stop loss. We have literature on the site on why we don't call it that, but 139 is approximately where we'd be getting out of this trade. We're still long for 33 days and almost 200%. Good Lord. AXTI. So I posted this as a trade idea on the Wednesday video. When I posted the video, it was at 104. It's up like 20 some odd percent, I guess, or 30% since that video. So I think, the breakout and the follow through is sort of happened at this point. Cypher, been talking about this one like a broken record. Nice rebound bounce today, held the exit line for us. ASTS posted this on Tuesday as well, working into the end of the week. App, this is the only thing that's really still not working, but it doesn't look terrible. It's just not getting a lot of attention and love and rotation right now. Obviously, there's a pretty clear level here above 505, 510. If we can break out, that's probably going to invite some momentum. You can see our exit is getting up a little bit tighter around this trade. So, I mean, that's kind of it. There's not a whole lot of new to talk about. The market is back to its same old ways. We still have macro pressures. We still have a mixed market environment in the short to medium term for us, which is a downgrade. So there are some signals here that just tell us, okay, let's not be blindly bullish, but the old script is still working right now. Semiconductor concentration, there's a little bit of new rotation happening, but really it's, raising stops, participating in the strong names. We have quant rockets, which is all over the leading stocks. So that's there if you need it. Our Galahad system is doing its Galahad longer term positioning thing. And don't forget to check out IBD in our sponsor, in the description of this video once you get done watching. So thanks as always for tuning in. We'll see you back here. Enjoy the long weekend. Monday, stock market holiday, and we'll be back next Friday. Take care.